This is Alpha, a unique perspective on the market. Following the chart trends of the sentimental funding model, we'll dive into today's pre-market observations on the U.S. stock market. Previous trading day. On Friday, August 29th, the U.S. stock market generally closed lower on the final trading day of August. As investor enthusiasm for AI-related stocks cooled, technology stocks led the decline, dragging the Nasdaq 100 down 1.16%. The S&P 500 also retreated from Thursday's record high, falling 0.6%. The Dow Jones Industrial Average fell slightly by 0.15%. Sectors. The market saw more declines than gains, with the technology sector, XLK, leading the decline, falling 1.53%. Consumer discretionary, XLY, also fell 1.03%. A few sectors, such as healthcare, XLV, and energy, XLE, saw gains. U.S. Treasury prices fell, with the 10-year Treasury yield recovering slightly to 4.227% after 3 consecutive days of decline. However, risk aversion remained strong, with gold prices surging to a 3-week closing high. The gold ETF, GLD, rose 0.96%, and the gold mining ETF, GDX, surged 3%. The cryptocurrency market suffered a sharp drop, with the Bitcoin ETF, IBAT, plummeting 3.37% and the Ethereum ETF, ETH, falling 2.23%. Furthermore, concerns about AI dragged down tech stocks. During regular trading, the market decline was primarily driven by a pullback in tech stocks. Following NVIDIA, Dell also released weak AI-related guidance, sending its stock price plummeting 10%. AI-related stocks such as NVIDIA, Broadcom, and Oracle also fell by more than 3%. The Federal Reserve's most closely watched inflation indicator, the Personal Consumption Expenditures, PCE, price index, rose 2.6% annualized in July, in line with market expectations and remaining largely stable. This continued to support market expectations of a September Fed rate cut. After the market closed that day, a bombshell announcement arrived. A federal appeals court ruled that the Trump administration's signature global tariff policy was invalid, finding the president to have excessively exercised emergency powers. However, the court allowed the tariffs to remain in place until mid-October, allowing the administration to appeal the decision to the Supreme Court. Next, let's look at some noteworthy individual stock news today. First news. Let's start with the Chinese concept giant Alibaba, ticker symbol Alibaba. While it's common for a company's stock price to fall if its earnings miss expectations, this is an exception. According to reports, its latest earnings report actually missed overall revenue expectations, with operating income falling by 3%. Yet, surprisingly, its stock price soared by 12.9%. So why did the stock price surge despite the earnings miss? The answer is that the market has found a more exciting story: artificial intelligence and cloud computing. The biggest highlight of the earnings report was the company's AI-driven cloud computing business, which saw a strong 26% revenue growth. This demonstrates to the market that Alibaba is not only not lagging behind in the hottest AI market, but is accelerating its progress. To further strengthen its AI efforts, the company has pledged to invest over $50 billion over the next 3 years to strengthen its AI infrastructure. Furthermore, Alibaba announced the development of a new AI chip, which was seen as a direct challenge to industry leader NVIDIA and even caused a drop in NVIDIA's stock price. It's safe to say that the market is no longer viewing Alibaba solely as an e-commerce company, but is beginning to reassess its value as an AI cloud giant. This shift in confidence is also reflected in Wall Street ratings, with Morgan Stanley recently raising its rating and assigning a high price target of $180. Second news. Let's talk about the fintech company SOFI, Nasdaq, SOFI. The company provides a range of financial services, including student loans, personal loans, investments, and credit cards. On August 19th, SOFI announced a strategic partnership with Lightspark, a company. The two companies will jointly launch a blockchain-based international remittance service within the SOFI app. What's so special about this new service? It aims to leverage Lightspark's technology and integrate Bitcoin's Lightning Network to facilitate cross-border transactions. The overall process works like this. The system converts dollars into Bitcoin in real time, transfers them across borders online, and finally converts the Bitcoin back into local fiat currency instantly. This approach reduces fees and speeds up remittances. SOFI CEO Anthony Noto stated that for users who frequently transfer money internationally, this service is not just a convenience, but a meaningful improvement to their daily financial lives. This move also aims to establish SOFI as one of the first banks in the United States to offer blockchain-powered remittance services. Third news. Finally, let's discuss Celsius, ticker symbol CLH, a rising star in the energy drink market. The company recently struck a major partnership with its distribution partner, beverage giant PepsiCo, which has boosted its stock price by 5.1%, bringing its total gain over the past quarter to 58%. This partnership offers three key highlights. First, Celsius acquires the renowned Rockstar Energy brand from PepsiCo. Second, PepsiCo invests an additional $585 million in Celsius, increasing its stake to 11%. And third, another Celsius brand, Alani Nu, will be integrated into PepsiCo's robust distribution channels. This significant partnership builds on the company's robust growth momentum. According to the latest earnings call summary, Celsius's second quarter revenue increased 84% year-over-year to $739 million, and its adjusted EBITDA more than doubled to $210 million. However, this rapid growth also presents risks and potential disagreements. First, Celsius's top executives, including the CEO, collectively sold over $22.13 million in stock between late July and mid-August. Second, Wall Street analysts are deeply divided. While investment banks like Needham and Truist are bullish, Bank of America has an underperform rating, predicting a 33% drop in its stock price from current levels. Therefore, for investors, Celsius presents a high growth, yet also highly valued, and controversial investment target. Next, let's examine the FS model analysis results and the specific trading strategies needed in the U.S. stock market today. It should be noted that this model does not fully consider the impact of current market news and is merely an indicator of operations based on internal rules, not investment advice. First, let's model the top 200 stocks in the S&P 500. Today's trading activity is as follows. Stocks bought: Guild 112.97, WM 226.39. Stocks sold: Orly 103.68. Stocks held: ASO 4198.53, MCK 686.64, BSX 105.5, WMB 57.88, KMI 26.98, LNG 241.82. Over the past year, this strategy has outperformed the S&P 500 fund SPY by 15.7% in this group of stocks. Next, let's model the top 200 stocks in the S&P Midcap 400. Today's trading activity is as follows. Stocks bought: OGA 44.66. Stocks sold: none. Stocks held: TKO 189.56. UNM 69.86. Over the past year, this strategy has outperformed the S&P 500 SPY fund by 25.2%. Finally, we modeled and analyzed the top 200 stocks in the S&P Small Cap 600 Index. Today's trading actions are as follows. Stocks bought: Coop 188.53. Stocks sold: none. Stocks held: CNR 74.26. EAT 155.98. Over the past year, this strategy has outperformed the S&P 500 SPY fund by 0.24%. Okay. The above information is just a few perspectives on the market and does not represent the entire reality. Please consider all valuable information and combine it with your personal investment and trading style.